It's a new trading week and the Dow and S&P 500 have hit new record highs. As we head into the rest of today's trading session, we're seeing mostly flat trading for the equity averages. So joining me today is Peter Cardillo of First Standard Financial. Peter, good afternoon and thanks for joining me today.
Good to be back.
Well, we have a lot going on. We got a handful of economic data releases today, but of course all eyes are on President Donald Trump's speech in front of Congress tomorrow evening. And earlier today, we also got a commentary out from an official of the Office of Management and Budget saying that Trump plans to spend $54 billion in defense, and as a result of that spending, will also get cuts in regards to lower priority programs. So what can we expect heading into this week?
Well, I think, a lot of this has already been built in. I think investors are really just going to take a wait and see attitude. There are other events as well this week that we're going to be looking at, and that is the Beige Book, and of course a slew of macro key economic indicators, along with a speech by Janet Yellen this coming Friday. So I kind of think, the market right now is basically hitting a short-term top in the sense that we're probably not going to see much reaction to the State of the Union message. I don't think it'll be negative. I think there'll be some sort of a positive reaction. But I think at one point or another, investors are going to look at the fact that perhaps there could be a rate hike as early as March. And if that happens, that means that the Fed is probably going to get its way, and we're probably going to see three rate hikes this year. So that could be a little bit of a damper for the market.
Well, Peter, now that we've covered what we've been focusing on in today's session here in the U.S., I want to shift our focus on overseas to the U.K. as well as the Eurozone. Now, in terms of currency market action, we saw the British pound dip earlier today, and it is still lower against the U.S. currency in afternoon trade. Now, there are concerns about a possible referendum in Scotland, and of course, we have the elections coming up. So what do you make of that action?
I think those two factors are the key. Some of the macroeconomic news coming out has been good. In fact, we saw in the Eurozone confidence go up, basically in line with the market was expecting. But we do have those two major events, a possible referendum in Scotland, and even more probably concerning is the French elections. And of course, that could be very detrimental to the markets going forward.
And last but not least, of course, we'll be heading into a new trading month in the middle of this week. And we only have another trading session left until March, and that means the final month for the end of Q1 here in the U.S. So what do you expect to see next month?
Well, as I said, I think now that the earnings season, is basically winding down to a crawl, it's been a good earnings season. Even if the quarter were to experience a 5 or 6% pullback, it'd still be a good quarter. So I think, we're going to end up the quarter on the positive side. We could give up some of the gains, but not necessarily anything that would be indicating a total reversal in confidence.
Okay, Peter, well, thank you so much for joining me at the beginning of the trading week, and thanks for your insight.
My pleasure.